Good afternoon, everybody. Today I'm joined with mining analyst John Feneck. In today's interview, we discuss Donald Trump and the tariffs that he's talking about imposing on Canada and Mexico, as well as we get into specific junior mining names that John likes, what sectors he likes, and where he thinks things could be heading in 2025. All right, everybody, enjoy the interview. John, thanks for joining us.
Hey, Happy New Year, Steve. Thanks for having me.
So there's all sorts of places we could start with here, but I got to ask you, as a precious metals investor and mining investor in general, we all, whether we want to or not, have to follow geopolitics. The big talk right now, at the time of hopping on here, is that Trump just had a press conference where he said he plans to apply economic force to Canada. I don't know if you've been following the headlines down here, but our government just decided to go on a 3-month vacation. So I'm sure that's pretty well planned out. So what's your viewpoint here? You think the Canadians should be worried about all this tariff talk?
I think the whole world should be worried about tariff talk. It's not just Canada, I mean, how that plays out and to what extent is really the $64,000 question, because we really don't have a baseline in the US to kind of look at, right? In recent history, you have to go back decades to see how tariffs played out in the past. And that's just really not relevant in a stock market that's run by algos, as you know. So I think it'll be really interesting. And I think people need to brace for more volatility in 2025. So that's kind of how we're prepared, for this year. It's not going to be a buy and hold kind of year, whether it's the broad market or gold or silver necessarily. I mean, gold probably buy and hold because it's been extremely resilient. So you just buy the dips, right? If it gets to 23, 2400, we're going to buy more. If silver gets back to 26, 27, we buy more there. In fact, we just added to our position in silver last week at 28.93. So we're just going to continue buying things and adding to positions where we have conviction and trade on the periphery.
So when we talk about precious metals, do you have you put out any sort of price targets or sort of maybe put your neck on the line at all a little bit over where you think gold and silver could head in 2025?
Yeah, so you attended my conference in Florida in October, and I was sitting with a CEO, Taj Singh of First Nordic, and he was like, "Fennec, you nailed it this year. You were calling for 2790, and it was literally at 2790 or something at that dinner by luck." But it's like that was our target this year is 3,000 being touched, and then somewhere between there and 3,250, probably getting to at some point this year, which would be a nice gain, obviously, from our recording here at 2645. But the nicest game to us is buying stocks like First Nordic, FNMCF that have 3 million ounces of gold in it, right? Gold and Caribou, you and I were just talking about, they just did a financing at 13 cents Canadian. Their strategy has been to basically do small financings, $1.5 million here, 2 million there as needed to drill the heck out of that project in Canada. And we like that strategy because it's not overly dilutive. They're just, being good stewards of capital. When they need capital, they raise it, but they're not doing like, 10 million here, 15 million there. And those two stocks we think are going to have tremendous years. They're both drill plays. So, the way we look at the world, Steve, is getting back to your question, we don't give like a year target on anything because especially in a Trump world, that's just a really difficult exercise. But we will say that, as we said earlier, 2,300 is going to hold on gold. And we think that the high end would be, probably 32, 3,300. Silver, we think will test possibly like the 27 to 28 level again. It just recently got into the 28s, as you know. But I think silver could be poised for a tremendous year. And that's different talk from us because if you were to interview me 18 months ago, we were saying silver wouldn't crack 26, for the second half of 2023. And we were absolutely correct. We were one of the only people with big silver position to basically tell the client, your listeners, hey, even though we own this, we don't think very highly of it in the near term. Last year, we changed that tune and said 26 would break. It did. 30 would break. It did. That was major resistance for 11 years. So now we're seeing, 30 literally at, as we record this, we're at $30 on the nose. So we think that this year you're going to see a test of 32 to 33 and then another test of 35, which is where it failed kind of between 34 and 35 last year, and then a test of 38. And if you can break 38 to the upside, you really only have 40 on the way to 50. I mean, there's hardly any resistance. So 50, as you know, has only been achieved twice in history. But I do think in the next 12 to 18 months, we see $50 silver. And that's why we're also spending a lot of time talking to silver companies right now, because there's tremendous leverage there, as you know.
So when you're looking at silver companies, what is it that interests you? I know that a lot of them are in Mexico. From my view, a lot of the silver companies that we've chatted with, they sort of said, "Well, we're built for $30 silver, $32 silver," and then we got those prices, and then we looked at their financial statements after we got there, and they still weren't really printing a lot of money. If I'm being perfectly frank, um, what's your criteria here for a silver company that gets John Feneck excited?
Well, one is diversification. Our top silver equity holding right now is Aftermath Silver, which is AAG in Canada, AAGFF in the States. We like that Michael and Ralph have attracted big money from people like Eric Sprott, right? Eric put another 5 million in right after Beaver Creek, like a week after Beaver in September in the fall of last year. Then he put another 10 million in, which gives him a control position now, over 20% ownership of the stock. That's rare to see Eric own over 20% of anything. He likes to keep it, 19.9 or lower. So that's intriguing, but not to us. We've already been talking to them like literally every month and saying, wow, this manganese news in February really adds to diversify your revenue stream down the road, doesn't it? And they say, yes, like we have 99.9% battery grade manganese now, in addition to like a huge position in silver in Chile and Peru. So like Aber Silver was another one we've talked about before in your show. They have 250 million ounces plus of silver. We like stocks like Aftermath and Abra that are just basically huge amount of ounces on the ground, so that as you get silver to go from 30 to 32 to 35 to 38, as we just laid out, these stocks are huge, have huge leverage to the price of silver. If you don't believe me, just look at Aftermath in Q4. After Eric put that 15 million bucks in, the stock literally went from 29 cents to 50 cents US within like a month. So there's tremendous opportunity in these kind of stocks.
So speaking of your conference, you brought it up. The Every time I go to a conference, I come back, people ask me, "Okay, Steve, what were the names that you thought were most interesting?" And I got to say, the name that I walked away the most excited about was 1911 Gold. I feel like that's a name that I look at it and I look at comparables and I don't really understand why it's so cheap. Obviously, we're talking about mining here. There's tremendous financing risk. And it's not to say anybody should go buy stock open market because like honestly, you just don't know. Like you don't know if you're going to get sandbagged by a reverse split and then a raise afterwards. But I got to say, on paper, I look at that company. They got a really high grade deposit. They've got a permitted mill. It's in a great jurisdiction. What's your take on that name?
Very deep value gold stock. Sean has done a good job of not, overly diluting, shareholders. If you look at what just happened with their raise in December, so they are catched up right now as of last month. They didn't do a huge raise. They did enough to get through, the next number of months. But we think that deposit grows. I mean, it's got a lot of potential. It's a near term producing asset, right? So by near term, we're talking like 2.5 years. We think they're back in production. So like when you see something that cheap as a gold stock, you can go back as your followers may want to do, go back and look at a 10 and 15-year chart. Maybe you can throw that in if you insert that down. I'm not sure if you can edit that
Yeah,
in or
yeah.
not,
Our,
but
our editor will put it over the screen.
cool. So just look at a 10 or 15-year chart, guys, of AUMBF, and you'll see back in 2011 and 12 when gold was cranking to then highs, the stock was close to $1 billion market cap. It's trading under $20 million market cap as we record this. So will it ever get to a billion again? Probably not, of course. But is it going to get from 20 million to 60 million? Probably. So, that's the exciting part of these juniors, Steve. They're completely misunderstood. People don't take the time to go to conferences like you and I do. They don't take the time to call CEOs like Sean to get a feel for what the company is planning, and they get depressed, right? I mean, it's easy to get depressed in this sector quickly because of the price action, right? When you and I hung out in October in Florida at my conference, things were flying high. I mean, it just was luck, right? That week was, we saw a lot of stocks making 52-week highs by luck. But then November 5th happened, and it wasn't that Trump is going to be negative for mining, which I think I see in a lot of like chat rooms. It's that he's going to be bullish for other asset classes, and that's where money has flowed in a casino like fashion over the last 60 days. So if you're a client, sometimes you only have a limited pool of capital, right? So you're saying, okay, I'm going to go buy Bitcoin at 71,000 on November 5th, and now it goes to 100,000. It's like, great trade, good for you. It's like mining stocks have done the opposite. If you look at something like Silvercorp, SBM, it went from $5 like all day long to $3 now all day long. So it's like 40% haircut. I mean, it's just there's tremendous value in our sector. And so I think people need to, just try to, keep it together when they're looking at like our sector, because it could be very depressing if you're looking at it every single day like I have to. But every day I'm like, this is a gift. This is a gift. Like, I mean, gold is trading at 2,500 plus, very resilient. This is the time to be buying gold and silver stocks and other things. As you know, I follow a lot of critical minerals areas as well.
So I want to ask you about what's going to bring cash back into the sector. What's going to make investors want to hop back in? And as I say, it's always the darkest before the dawn. And right now in the Canadian junior markets, we've seen some stuff in the tech world at least pop up in the early stages of the year, but in the mining world, it feels like it's more or less the same kind of depressing slog. And I saw that exact same trajectory as you back when your conference was in the fall. Things were very, very happy, and then Trump got elected. And from my viewpoint, what's happening is the entire sort of junior investing world is kind of looking around, going, "Okay, what's going to happen? What does Trump mean? What does it mean for mining investments?" And we're kind of sort of at that standstill. But then I also think of an interview that I recently did with Rudy Frank from Seabridge, and one of the points he made is if you look at companies like Seabridge, they've effectively doubled their share count over the last 20 years while staying at the same level of production. And he'll say that whether he's talking about Barrick or he's talking about Newmont or any of these big names, they haven't done a great job as custodians of capital of going out and getting returns for their shareholders. And I'm curious if you take that viewpoint that the large mining companies haven't necessarily done that great of a job, and that's part of the reason that we aren't seeing capital flow in just yet, and why it's not trickling down to the juniors.
That's a great point that you and Rudy bring up there, because the share count is very important. You have to look at share count and not get freaked out by a large number. Then you have to ask the second question. Well, okay, of that 250 million shares outstanding that I see on this website, who owns what, right? And one of the things that Don Durant, my YouTube partner, and I, look for is 30% plus ownership by good hands, meaning management, the board, a big strategic investor like Eric Sprott or Rob McEwen. Like, these people are generally not sellers. So when you see 30% of the float tied up, and that means fully diluted for me, you feel better about avoiding a take under, right? Like a take under would have been a Marathon Gold by Caliber, whatever that was, like 15 months ago. Great for Caliber, terrible for Marathon shareholders, right? Like, just terrible. Alexco getting taken out by Hecla. Great for Hecla, HL, terrible for Alexco shareholders, right? It's like, I'm not in the mood or don't spend all this time to have a take under happen. You need to do your homework as an investor, or align yourself with someone like me who is doing the homework to make sure you don't get surprised like that. So when Don and I interview people, we're always asking that question. And sometimes we get an answer we don't like, right? Like, hey, we're just looking for a double here. Or, hey, we're looking for a strategic investor, and we're real happy with getting a strategic this year. That's our whole plan, our game plan for the year. Like, what? Like, some of these companies do a poor job, like you said. Like, they have to I think, going back to AberSilver, choosing that as an example, they have a slide in their deck that shows what are we doing for the next 24 months. I think that's great. It's like showing the shareholder, here's our plan. Whether or not we execute it, let's find out. But like, at least we have a game plan. You need to have a game plan as a junior mining company. Newmont, I'm sure has a plan. Barrick has a plan, but these are, larger cap companies that I think, both provide tremendous value right now. I mean, I just bought Newmont for the first time at 37.05 a few days ago. I think Newmont, as the largest holding in GDX, will just get capital as a result of being the largest holding in GDX this year. Plus, they did a great job of cleaning up their balance sheet recently, right? I mean, look at all the projects they sold, and for the math, do the math, and it's billions and billions of dollars. It's like they're able to avoid having anyone come after them for having a questionable balance sheet now. So as we move from a growth oriented market to a value oriented market, I think people will start gravitating more to a Barrick or a Newmont.
So I also got to ask you, because you brought up that you follow other critical minerals as well, and we look at what's happened in China, with them sort of locking down some of the more, say, abstract metals that people don't really talk about, like gallium and antimony, just to name a couple. Are you following any of these types of commodities or stories out there, and sort of do you see any opportunities you can talk about?
Yeah, absolutely. And to be fair, when people go to my website, fenneckconsulting.com, and look at our performance tab, a lot of that outperformance last year was generated by having positions in critical mineral stocks. You talked about antimony, right? We talked about Perpetua 18 months ago, PPTA. Then Morgan Stanley wrote it up in April of 2024, and that really got my attention because Morgan Stanley doesn't really have much of a clue when it comes to mining, although they are the biggest broker-dealer in the U.S., probably globally. They don't have much of a clue when it comes to mining stocks. So for them to write up PPTA was really interesting to me, and I mentioned that on a bunch of shows. So yeah, I think that the U.S. has finally gotten the message that Biden and his administration have done a terrible job of doing anything to make us competitive as a country with China in the critical mineral situation. And it is going to be more of a commodity war or a currency war that I see developing going forward, rather than World War III, which is talked about like literally every day now, everywhere. So I think that China can say, hey, look, we control 90% of this mineral, 89% of that mineral, 70% of this mineral, and what is the U.S. going to do? I mean, like, when you look at tungsten for an example, right? I mean, I've talked about this stock one time before, I think, on your show. Guardian Metal Resources, GMTLF in the US, GMET.L in London. They don't have a Canadian ticker. This stock is very well positioned right now to get DoD money, in my opinion. If you look at Fireweed Metals news back in mid-December, they just said, hey, we got $35 million as a grant. The stock is up maybe like 7-8% from that news. But I think it's going up a lot more because, as you know, Steve, in this sector, these are stocks that are flying under the radar. Very few of them have any analyst coverage. The analysts who do write them up sometimes aren't the best analysts, and so they don't really have an impact when they send stuff out to clients. And that's why you have to do your own due diligence, or align yourself with someone like myself who's talking to the CEO of Fireweed, talking to the CEO of Guardian, and getting an understanding of what exactly are they hearing from the U.S. government, right? Like is this something that's going to be a grant now, a grant in 6 months, a grant in 12 months? I couldn't tell you that. I just think it's a 2025 event for a lot of juniors, because the U.S. is so far behind in the race against China that they're going to have to do something this year.
So, John, before we wrap it up here, I got to ask you if there's any other names that you haven't mentioned here that you'd maybe like to discuss or mention.
Sure. Well, just going back to what we talked about originally with gold, I think it's just timely to give some people a little more metrics here on some of those companies. So we mentioned First Nordic, FNMCF in the States, FNM in Canada. The stock's trading at 25.5 US right now. I think Taj ran Discovery Silver during its heyday, right? You kind of gravitate towards people that have had success elsewhere and are trying to replicate it with a new company. So they have 3 million ounces of gold identified in the ground. They're going to plan to drill. They just raised money, which I love, in December. I think they raised 10, 11 million bucks. That's going to really do a good amount of cover a lot of the drilling this year, right? So they don't need to be doing additional raises right out of the gate. And I think, they could do a raise at a higher price, but they're not doing another raise here at 25 US. So that's one that we really like for this year, because we think they can get to 4 to 5 million ounces of gold by the end of the year. Gold and Caribou is GCCFF in the States, GCC in Canada. I think that stock is a pure drill play, right? They're surrounded on 3 or 4 sides by Osisko. The Osisko CEO there, Sean, knows the CEO of Gold and Caribou quite well. I don't think Gold and Caribou wants to be drilling this thing for 2-3 years. I think they'll drill the heck out of it this year, and then they'll probably try to sell it or JV it, within a year. I mean, like, you don't have a long time wait, is what I'm saying. Some of these juniors, you can wait 5 years for something to materialize. I don't think that's the case with Gold and Caribou. And then lastly, just, we look for a lot of ounces in the ground, as you can tell from some of the stocks I've given your listeners with Aftermath and First Nordic. And so we like NextGold, which is NXGCF. Don't know if you got to meet them at the conference, but they were there. They were just going through a transition that they were merging with Signal Gold, and now that transition is complete and approved. So that new company has got almost 7 million ounces of gold. It's unbelievable that it's trading at 49 cents US. Like, this is another gift, where Frank Juster is now involved. He knows what he's doing. The teams are deep enough that they could build it themselves, the combined entity now, which I think the market is really missing, right? There are companies that have no desire to build it, like Gold and Caribou, or there are companies that can't build it, right, because of their lack of expertise in the field. This is not the truth with NextGold. They could build it, and I think the market needs to come around to that, way of thinking, and that would re-rate the stock.
Mm-hmm. Yeah, we've had Morgan Lexstrom on a few times, and he's definitely built a case for aggressively trying to build a mid-tier gold producer in a short period of time. So it's certainly a name we're following. Last question for you, John. If anybody in our audience wants more of your commentary, you mentioned your website. Where else can they go to find more of your commentary?
Yeah, sure. So on fenneckconsulting.com on the homepage, or you can just go to subscriptions, you'll see that we offer 3 things. One is the newsletter, which comes out, a couple times a month, and that's $65 a month, or cheaper if you do like 6 or 12 months. That is a good entry point into our services, but the real value to us comes from the real-time updates we provide. And that is like, hey, November 5th, we're telling people like, hey, or November 6th, to be fair, this Trump win is going to cause volatility in our sector. And like, if people were to get that email, you can now look back 2 months ago and see we were correct, right? And you could have stepped away. We raised 13% cash real quick in our portfolio, and that saved our year, right? I mean, like, it really did. So there's things like that I think are very valuable in terms of real-time macro stuff that I'm seeing and my analyst is seeing, that we share with people for a little bit higher fee per month. And then we just do paid phone calls, Steve. So if people want to say, look, what do you think about this news on so-and-so? I'm not a geologist. I don't know how to interpret this. What do you think? I'm not a geo either, but I do talk to the companies regularly, and I could probably provide a lot more information around what this means. We just talked about this today with a Mexican gold stock that put out a press release that was kind of difficult to interpret, and I broke it down for people in a paragraph. And that's sometimes the things that are helpful on phone calls.
All right. Well, John, thanks very much for hopping on here. I always appreciate getting your insights, and I look forward to seeing you at your next conference, which I believe you said is in May. And hopefully you'll keep coming back on here in the future, because I know our audience loves getting your commentary, and we always enjoy it. So thanks for hopping on, John.
Pleasure. Thanks a lot, Steve.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Guys, also let me know what you think in the comment section. Thanks, everyone.